Hey everybody, it's Paul Macaluso, the Multifamily Renegade. Today I wanted to go over some interesting stuff about voluntary foreclosures. And if you're not sure what voluntary foreclosure means, it's basically when a property owner hands their keys back to the bank and says, "Hey, I did my best, guys, but sorry, I can't make this work." So in commercial real estate, there's a lot of talk right now about a commercial real estate crash and what people think is going to trigger that crash or what has already happened to trigger that crash, so on and so forth. There's a lot of information out there talking specifically about a commercial real estate crash. But what this is going to show you in the chart that I have up here on the screen, this is from Q1 of 2019 to Q1 of 2024, where it shows the voluntary foreclosures. Again, this isn't a forced foreclosure where the bank comes after you. This is you going to the bank saying, "Hey, we did our best, here's the keys." So with this data for voluntary foreclosures, and this data comes from CoStar. If you guys don't know what CoStar is, you're asleep on that. You better wake up, because CoStar is the shit. These guys provide a wealth of information. They spend a ton of money gathering the analytical data on commercial real estate. So if you don't have a CoStar account, by all means, go get one. It is awesome, and it'll certainly help you out in your investments. I'm not an affiliate. I don't earn any money from that or anything, but I digress. Let's get back to this. So in this article, it talked about the different product types over 2019 to 2024, what has been voluntarily given back to the bank, and it breaks it down by product type, and then it gives you an overall count in those. And what the article was saying is that this activity has slowed to its lowest level in almost 5 years. But I really think that if they had expanded this chart to 10 years, it would give us a lot better indication. Because in my opinion, what we saw leading up to 2018 and 2019, I thought personally was going to be the catalyst that triggered the downward cycle in commercial real estate. But then COVID hit. Nobody saw COVID coming, apparently. And when it did, there were certain things that people that were able to hang on were benefactors of, such as low interest rates, such as uh, hyper appreciation, and massive rent growth. So those three things, people that were able or were on the verge of getting into trouble late 2018, 2019, they were the benefactors in 2020, 2021, 2022 with that type of stuff that happened. But it's very interesting to see that when you look at these product types, really, multifamily has done exceptionally well. And I suspect what we see here in the uptick from Q3 of 2023 to date, we see quite a pretty big uptick. You know, we had 4 and then jumps all the way up to 34. So we almost 10x'd the amount of voluntary foreclosures. But I suspect what we see in that particular area is we had a lot of people that started to build in the beginning of COVID, or just had projects coming out of the ground during COVID, or had plans to have projects come out of the ground shortly thereafter. And basically what happened is people got their projects completed and did not underwrite them, or even have the idea to underwrite these projects at double the amount of what the interest rates were when they first started. So, you know, doubling the interest rates on these, when you have when you're building a project for multifamily or any other project, you have construction debt, and then you have to refinance out of that into permanent debt when the project is done and stabilized, or up to a certain point. And I suspect we see this uptick right here because of that speculative building that went on to try to meet that demand, that false demand that COVID pinned up against everybody in the market. So that's my 2 cents on it. It's a very interesting article. I would love to see this chart 10 years out, and I think that would give us a lot better understanding of what's going on right now than just a 5-year look, because this 5-year view that they're giving us is not a normal market by any means, that 5-year period. So if we had the opportunity to expand that out a little bit further, I think it would give us a lot better understanding and gauge on where things are to come. If you liked what I had to say today, if you disagreed with what I had to say, make sure you drop me a comment, let me know. But that's my 2 cents on it. If you haven't already subscribed to the channel, please make sure you do so, and click that notification bell so you can get the new videos, or get notified of the new videos that we drop on the channel. So That's it. Paul Macaluso, the Multifamily Renegade, signing out. Hope you guys enjoyed this video, and I'll catch you guys on the next one.